Okay, perfect. So like I mentioned, I saw this EG trade, and then there was a strong push up. So I was looking at the left-hand side where the highlighted box is. So I said, okay, well, the first initial entry was where it was my second entry, right? That week, and it pushed up. However, it came back down and it pushed 15 pips lower than this candle over here. So I was wondering, why did it do that? Because over here we can see it gave us a nice weak entry on the second entry and even on the first entry, because I was looking at the a lot of times, and I don't know why, but a lot of times when I've been marking up charts and I look at these institutional candles, either the entries are always happening at the wicks or the 50% of the candle. So that's why my first entry is at the wick of the candle where the highlight is. You with me?
Yeah.
Okay, so that was my first entry and the 50% was my second entry. So it kicked me in and then it dropped again to the 50% and then it pushed up. So when it pushed up, I was in a bit of profit, but then it started dropping and it dropped 15 pips lower than this candle. And I was wondering, okay, why is it dropping 15 pips lower than this candle over here? Because as you
One thing I would say is you're on a 1 hour chart, right? If price is just lingering, like how many, I could count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. For 12 to 13 hours, the price was just stuck there. If that was a true institutional candle, the price won't be stuck there. Okay, so once I see this happening for more than 3 hours, I just close the trade, because if that was an institutional candle, it should push away straight away. So you could see, I don't know if you've seen Zach and Jordan sessions when they talk about confirmation checklist. If price is just sitting there, it's not going to happen. Okay, so I would have closed my trade there, and I'll think, okay, what's below all of this? And then if you're looking below all of this, I mean, if let me just, let me share my screen real quick. When was that?
this was last week sometime. But I marked it off. I was looking for what happened, and I remember you said that drop down to the lower time frames to see exactly why is this happening. And then there was a 15-minute down candle before they'd move up, and that is where it like really spiked up to the top. So at that point, I was like a little bit confused in sense of like because I didn't know like what you just mentioned right now about if it's 3 hours later and then you just rather close it because that's not the right move.
Yeah. So
So basically, if the move doesn't happen very quick within the first 3 hours, close it out.
yeah, like if it's, I'm just wondering where that was. Is it this bit here?
Uh, go zoom in a bit for me.
Yeah.
Yeah, it's that, but yeah, 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 because check they just carried on dropping out of the sky.
Is this bit right?
Yeah,
Yeah. So this was another thing I was gonna mention. So okay, so yeah, I could see exactly where you were. So yeah, look straight away, it's equal lows here. So I don't trade EG. I just do it because I like trading GBP based pairs. But straight away you can see equal lows. And then when you see equal lows, this is why I mark it out, because I know this is gonna get taken out. So you got in here, but you're not understanding there's an equal low right there. So 100% is going to drop below here to take out these lows. So that's why it was linger here, because when it lingers here, the more time that elapses, it gives people that want to buy, like, yeah, it's positive. Yeah, it should go up because, yeah, it's just staying here. So it should go up. So when people are buying, 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 where's all their stop losses?
below there.
So what happens? Gives everyone hope. People keep buying, 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 because look, how many hours? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 hours. That's people buying because they're saying this is such a solid area. Support and resistance is perfect. They're buying, 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 buying. More stop losses. And then all of a sudden, what happens when it comes into London open, 7 a.m., 8 a.m., 9, and then bam, takes everyone out. Look what time. So you would have got into this trade, like these are the times. Remember I said about my trading times? For me, 7 a.m. to 3 p.m. London time. So I think you said you're 1 hour difference between us.
Yeah.
So this trade, you would have been taking it at 5 o'clock, 6 o'clock your time, I think. Okay, so that's outside of the trading times. Okay, that's outside of when London and New York session is really popping. From 4 p.m., I don't really look to take trades because I know it's just moving into Asia session, and Asia session, like most times, is just consolidating. As you can see here, if I put my, what happened to my separators? Don't worry about it. Actually, let me just show you something quick. Weekends. What's the thing called again? Weekends. Is it this? Yeah. No, it's not this one. I'm forgetting what this thing is called.
Session breakers.
Yeah, but there's another one. There's a specific one I like to use. Check out this one. No, it's not that one either. There's a other one I like to use. I can't remember what it's called. Anyway, so you can see this is moving into a new day. So consolidation happens during the Asia session, and then yeah, London session opens, spike down, moves up. But as you can see with Euro GBP, it's just in a really bad state anyway. It's just not doing anything. Okay, so yeah, you might have been, if you was able to, if we really wanted to catch this trade, okay, so below equal lows, every time I look, I'm like, okay, what's below all of that? Like, why would we want to catch a trade from there? Okay, let's look at the 30-minute on that. Okay, so just inspect it. Okay, so you can see here.
Yeah. Strong push down.
Exactly. And 50% of it. So that's why I would have got the trade from there, because that was the last push down before we came into this area. Okay, but equal lows comes into it, away we go. So you would have had literally like a 1 pip drawdown on that. And then you could have taken your profit at these highs. Okay, came into this, so 60 pip trade. And then the next one you would have been looking at is potentially from here. But as you can see, it's just a lot of consolidation. It doesn't want to move higher. So it just drops again. Okay, so Euro GBP is very ugly to trade right now.
Yeah, I figured.
Along with a lot of GBP pairs, but long term, as I think I showed on my session, like this is what I'm looking for. I want it to go all the way down, so I'm not looking for no buys. Everything I'm looking for is a sell.
Oh yeah, seeing this UT and UTAD and STBC, etc. On Wednesday, you were showing when you were doing the session, you pulled up a picture from stockcharts.com that had this UT, UTAD something. Is it this one? I was trying to look for this picture, but I couldn't find it. If you mind sending it to me on Insta or Telegram, bro.
Yeah, just take it. So you have to do is type Wyckoff schematics, and then you'll find this website, school.stockcharts. And then I just literally have it on hand at all times. As I said in my session, it's just always there. Because when you see it a lot, when you see it all the time, then it just imprints into your head. Like you just see it, and it is what it is. And then from there, you just think, okay, how does this fit into my charts? And then yeah, honestly, those are the things. So this is schematics. So you have two versions of them. Okay, so you got this version where it doesn't do the other push like this one. So you have up thrust and then up thrust after distribution. Whereas this one, it just has an up thrust and then it goes down. So sometimes this can happen. You don't get that other push higher than that. So
Okay.
yeah, you just have to be aware of where you are in the market. Okay, so yeah, this was that. So for a second, I was even thinking this one might be one of those ones that doesn't have the up thrust after distribution, but I knew there's a daily open order right there. I mean, if I scroll, I'll find it, but yeah, that's long. And then I was like, there has to be one more push to the upside. So I was ready for all of this to happen. And you can see he created these equal lows, perfect equal lows, imbalance behind that. And then obviously these are the two candles we got our eye on. So when that happened, I was just selling, selling, selling. And obviously, if you know Euro GBP is going down, then what's going to happen to GBP base pairs? They're going to be going up, right? So yeah, so that's where we got that perfect entry. And then yeah, we started buying from here. As you guys know, that was like probably one of my best trades ever. Like it was so clean. It was like too perfect. It was just like the most perfect trade ever. If I could even find it, I think I'm going too far. But yeah, so you just understand. Yeah, that was it there. So you just understand that.
Okay, so I got one question, right? And I
Mhm,
hope you understand by the way I'm going to explain it. So say, for example, we have a really strong push to the upside and we come down to an institutional candle that gave that push up.
mhm,
Now, when that happens, say we can see clearly that, okay, this is like the place that it's going to bounce off and it's going to shoot away. So it builds you up in confidence. Now, how do you know where that institutional move would take place? Like, say, for example, on the way down, you find two opposite candles, and then the strong push happens again. So how do you know in between there whether you're looking for the first one, second one, or you're going right to the bottom for the third one for it to play out? And
obviously.
also how do you know when the trend eventually changes to say that okay, I don't think we're gonna go to this institutional candle anymore. We're just gonna fall down, like how EG was playing out, for example. Like we were looking to go to that institutional candle on top for it to drop, but it just carried on dropping out of the sky. So like how do you know when that's gonna happen in the marketplace?
Okay, so what I always look for is where was liquidity taken, and price would naturally get attracted to that again because he wants to rescue that order. As you can see here in this instance, I was waiting for a sell from here. Okay, I was waiting for a sell from there. I had my sell limits, everything, because we had these equal highs. This candle just ran above it, and you can see this candle broke above this one just slightly. You can see here it just went
Yeah.
slightly above that, so that's a break of structure. So I know we want to move to the upside, so I put break of structure. Okay, so I'm like, cool, we just broken structure, so I know we need a retracement now. So it's gone high, expanded, and then I'm like, cool, we need a retracement to push higher again. So what did I mark up? I'm like, cool, we need to come into here, and I was waiting for a sell here. It didn't come with that high. We was buying from here. Like, yeah, I think Santos showed it on the session. We was buying from here, but now we know we left imbalance here and this candle that we need to come back to. And then we want to push higher into these areas. Okay. We want to break past these highs. So you can see what I'm targeting now. So it just institutional candle to institutional candle. You can see lows were taken out there. This candle done its thing. So this area is of interest. But on a smaller time frame, like 1 hour, you can see there's this little cube that I'm looking to play off, or maybe this little cube that I'm looking to play off. And there's imbalance here as well. So I'm waiting for a sell here, and I'm thinking it has to, because that's literally the picture perfect move. But I'm like, cool. If I go into the 4 hour, this is about understanding the candles and what the candles actually represent. So I think this is probably the perfect example. You can see how on a 1 hour these highs are taken, but you can see on a 4 hour price is going down like this. So people are selling, selling, selling. All their stop losses are here, and all of a sudden this 4 hour candle pushes up, takes everyone out, and drops. Okay, so on a 1 hour, you can see I was waiting to sell from here. On a 4 hour, as you already know, we measure out what? Bottom of the body, 50%. If I mark up 50% here, look at that reaction. So I sold from there. Okay, again, what does that leave us? 3 pip stop loss, 115 pips, 120 pips. And where we heading to? Down to this area. Okay. So that's my bias on that. And then on top of that, I'm like, cool, even though there's institutional candles and all that stuff here, if we zoom out slightly, what do we have here? It's just being a downtrend, right? So we know we're in a downtrend. So all I'm looking for right now is like, you know what? This, even I'm selling from here, even though I know this setup is here to take us back up. I'm just thinking if we go back up, that means we're breaking the structure. That means we're going to be now in an uptrend. But why would we be in an uptrend if we know we've got equal lows to take out here and there's big gap to fill? So now, even though I've got buy setups here, it just wouldn't make sense if we now go break structure here, because that means we'll now be in an uptrend. But why would we be in an uptrend? There's like nothing there for us to be in an uptrend. Okay, so everything right now is pointing to this. This is the target. So that sell that I caught off the 50% there, I just hold this into here, 50% of this imbalance, 630 pips. So even though it's going to come into here, like I said, I hedge against myself, which means I buy, like I'm selling from here, but I'll still take the risk of buying from here while holding these sells. So even if the buy doesn't play out and I get taken out, no problem. I've still got these sells from up here. I keep going. So whatever I lost here, the sells that I'm already in will make up for the loss, and then we just keep going. So I'm like, cool, once I break past this level, then what's my target here? So let's say I lost 30 pips here. No problem. This sell is going to make up for those 30 pips, because why? If we break past here and we try to aim for this target, my 30 pips are covered. I've got 155 pips to cover it. And then if you're heading down here, we've got 400 pips. So it's just understanding market structure, understanding why the institutional candle's done what they've done, and what's the market structure. So even though I want buys from here and it looks like a good setup, that means we'll be breaking market structure here. This high, you can see this high is lower than this one. Okay, so as you guys already know, higher lows, lower lows, and all of that kind of stuff. Okay, so everything's pointing down to the downside right now. Okay, so
I just want to know, ne? You're using the Fibonacci now there. The institutional candle, you use the Fibonacci for the institutional candle to actually show. So let's say you drag down there and you use the 50%, the 71 or the 76. Ne?
yeah.
You're actually just looking for the whereby the institutional candle lies in between that area. And then, you know, if the institutional candle is in between that area, then, you know, okay, that's a valid institutional candle.
Yeah, you could use it that way as well. So usually I don't use the Fibonacci for where the institutional candle is. I don't think, oh yeah, this Fibonacci lines up perfectly with this. But sometimes when it does, then it's extra confluence, which means extra confirmation. But you can see in this instance, the 78%, if you're looking at this last up candle here on a 4 hour, if you measure that candle just slightly more, it went slightly more than 50%. But if you said you wanted to plot your sell me at 50%, then you would have had 14 pip drawdown. Okay, and then as you guys know, we're always looking for the minus 27 to minus 61 for our take profits. And what does that line up with? The 61.8. This candle. Okay, it lines up with that. Okay, so yeah, when I'm using my fibs, I still kind of old school with it. So I'm like, cool. The top of the move where it started to drop, this leg, you can see it went all the way down before the retracement. Okay, so from here, I take my fib right from here. Okay, and then to the bottom of this body, to the wick, and then that's how we start looking for where can it potentially retrace to. And my favorite levels are 78 and 88.6. 88.6 would have been up here to fill this imbalance, which I was looking at, and I was thinking, okay, cool. However, on a 1 hour, as you already seen, on a 1 hour, you already know what happened here. Equal highs taken out, and then it drops. So the 78% was the level that would have been perfect. Okay, so it hit that, and then straight away, you can see we're heading down, and you already know what we're targeting, minus 27. What does that line up with? It lines up with these lows here. And on a 1 hour, you can see these are equal lows. That 41 takes that out. and 61 lines up with this, but you already know the ultimate target is to fill this gap.
Imbalance.
Okay, so that's how I use my fizz. Okay, so
okay, so you're only looking at the 78 and the 88.
Yeah, basically. Usually I took off the 61.8 off my thing, but sometimes I just still like to have it just to see what's happening, what a retail trader's seeing, because for retail traders, 61.8 is the golden level, right? So yeah, I'll keep that on there because what trade was it? I think it was even UCAD. Yeah, it was UCAD. Was it UCAD or CJ? I can't remember. Oh yeah, it was UCAD. So look, retail traders will be like, see, this is why 61.8 is the perfect level, because look, if you're taking a fib from this high to this low, look where it came off, 61.8. But you have to ask yourself, what's at the 61.8? If I go to the 30-minute, look at this. 50% of institutional candle. This is why they do this. So they make retail traders think 61.8 is the perfect level. But they've printed this candle here. So they know, okay, look, we could buy it to sell, and we did. And they come to rescue their money. Now they've taken the money out of the market, and then they move the market down. And retail traders are like, oh my God, 61.8 is the perfect level. But no, they already know what they're doing. They put this candle here. They put this candle here on purpose. Okay, so if you think about it, look, price is going down. The only imbalance we have here is within here. This is why I wanted the sell from here. Okay, so this candle is still sacrificed. Okay, so you can see they bought up, sold. That's sacrificed. They took some money out here, but still some money's left in here. Then they came here, done the same thing, but they took all the money out here and moved the market down. Okay, so like we know banks could hold their drawdown for years if they wanted to. It doesn't matter to them. But this is why they create these things here. Buy it to sell candle, it comes back up. And this is why I took myself from here. I remember what I was saying about the 4 hour 50%. Okay, 4 hour 50%. This is this whole thing right here. I can't remember where, yeah, I think it was like this. Okay, 4 hour 50%. Look where that lines up with.
And this is beautiful.
Okay, so it looks really messy, but let's zoom into this candle. Look, 4 hour 50% of this big volume candle, like I just measured out. Let me do it more accurately. Look at that, 50% heads down. Okay, so that's why these things happen. That's why you have to be flexible. Understanding the volume that's gone into the market is a broken structure, which is why I put this here, break of structure. So we now was looking for a retracement now. So when it dropped to different time frames, and this is how I found this, the 30-minute, and I was like, oh, it's interesting because the 4 hour of this volume sits right here as well. So that's why I took the sell. So even though I wanted the sell from here, which would have been better, you have to be adaptable. And then I saw this, sold 120 pips, and we know what I just showed you is either heading here, which would be a very nice trade. From there to there was like 200 pips, and then obviously on a 4 hour, I really know what's actually happening. Okay, so I trade UCAD and CJ exactly the same because they do the opposite to each other. CAD JPY. Remember that 4 hour candle that went down? CAD JPY, same thing. When this is going up, UCAD is going down. Exactly the same thing. You can see this 4 hour candle. Top of the candle there, we had that perfect entry. Okay, but I caught this on Thursday. I caught this. How? Because you can see these equal lows here, broken. And then where do we enter? This candle down. I'm like, cool, let's get in. Okay, so I saw that straight away. Put my entry there, stop loss just below. You can see you're risking 8 pips if you really wanted to. 8 pips, right? So here, I just put my stop loss just below this candle here. I mean, this wick. So I risk.
You always put it below the wick.
Yeah, I like to put it below the wick. It depends. Usually, like candles like this, because I know it's like usually I put it below the body if I can, but like in this instance, if I put it below the body, I would get taken out. It's like 4 pips taken out. But when this trades like this, is put it below the wick. It's always better to put it below the wick because it could come 50% of the body or it could do the whole body. As you can see, this one, it came below here. And then all of this is protected because now you know if it comes below this wick, this trade is not valid. It just made a lower low. Okay, so you can see we had this push up, comes back down. I'm like, cool, let's get in because I've got confidence because I know these lows just got taken out and prices suddenly pushed up. So what's the agenda? Let's move price up. So on Thursday, I got in here. And then as you can see, Thursday night, we just ran it up, just 106 pips. And then Friday, and this is what I'm talking about timing. Usually I wouldn't take that trade. It's 5:30 for me, but I'm like, I saw this happen 5:30. I wouldn't usually take this trade, but I was like, well, what have I got to risk? 8 pips? No problem. If I get wiped out, I'm done for the day anyway. This was literally the last trade of the day. And then we head up, and then you can see into the Asia session, consolidation, consolidation, consolidation. And then if I flip to the 4 hour, you can see why we got that push up. Same as UCAD. This is why I trade both of them the same, because when one's going up, the other's going down. 4 hour, these lows are created. You can see how they just spiked into it. These lows, and this is the Thursday trade. This is why I took it Thursday, took it out, and then connected into here. Perfect, no drawdown. Friday, it's gone up, it's broken past this. I'm like, cool. This is what you have to understand. When the candles get engulfed like this, you can see how this last down candle that took out the liquidity. The Thursday trade I took spiked above this, broke above that. So I'm like, perfect. Now this is the area of interest. Okay, so I'm looking at this 4 hour. I'm looking at this 4 hour. I'm like, cool. We could get a trade from the top of there. Or can I, because I don't really want to, how much was the stop loss would have been? If I'd done that, that's like, what, 50 pip stop loss. I was like, I don't really want that. So I went onto the 1 hour. I was like, what's on a 1 hour? And then you can see, saw this setup, which I marked out, which didn't play out. It could still play out, who knows? Here, last down candle before another push up. Left some imbalance here. It's a very sly one, if you guys could spot it. So yeah, you see that imbalance. Let me just bring that back. Okay, very slight imbalance. Okay, so this is still valid. I still got my buy limits here. But as I saw UCAD happening, because remember I said UCAD does the opposite to CJ, I saw UCAD happening and I'm like, what if they want to play off the 4 hour? Because I saw this and I was like, you know what? I'm gonna take the risk. I'm gonna buy CJ from here. It's respecting the 4 hour perfectly, same as UCAD. UCAD respecting the 4 hour 50%. So I said, you know what? I don't care. I'm taking a risk. It's well within our parameters because that was the last down candle, engulfed, broke structure, came back down. We're in. I mean, the fib levels is not something I like because, like, if we're looking at it from here, high to low, 61.8. I mean, retail traded. I don't like that fib level, but it plays out. But it's playing out because of what? This last down candle took out liquidity. As you already know, top of the body, 50% is what we're looking at. And it starts heading up. So what we're looking at now, H1, to fill this imbalance. Okay, so yeah, just need to fill that imbalance there. So that's the target. But I wanted the lower entry. But obviously, like I said, you have to be adaptable to the market. And who knows? Who knows? Like the market could open on Sunday and then we get that spike down. Because price action right now is like, I mean, slow and steady wins the race and everything. But when it's just literally just jigger jagger like that, usually that tends to happen. Usually. Because if you think about it, they want to make all of this price action perfect. So there's literally no gaps. There's nothing. So when this does come down to here, it's got no excuses to stall. It just flies up. Okay, this is why you see moves like this. It does this, spikes that, leaves all this imbalance because it knows price is going to come back down to fill it. Algorithm has to do that, but it's left this tiny one here. This is still unfilled. So when it creates a proper healthy price action here, and then it's done its job, there's literally no gaps, no more. There's one gap left just by our entry. So when it does fill this gap, there's no excuse for it to stall around these areas when it wants to go up. So I won't be surprised. I still got my buy limits here. Comes down into here, we fly up. Show this imbalance. Show that imbalance. What else have we got on top of all of this? Equal highs. What's below, what's above all those equal highs? Institutional candle.
Institution candle.
So now you can see the idea behind the whole trade setup. Okay, it's just step by step. It's institutional play to institutional play. It's all right. You just have to ask yourself. Remember the question: where is the money? And don't forget, there's all this imbalance over here as well. So when this is done, when it's taking out liquidity this side, so you probably hear Matthew say this: as below, so above. Takes out liquidity here. Okay, cool. We've done below. Now what's the objective above? Imbalance. Mitigate out that candle. Okay, so when that's done, what's below? It's just like steps. It's like up, down, up, down, up, down. So, all right, cool. Now we know that it's done below, it's done above. So what's below again?
Oh, okay.
Okay, so it's just like steps. It's like that's why every time on my sessions I say it's just a puzzle. It's like you can see everything that's on the table. It's just what order does it go in? It's just solving a puzzle. Okay, so the puzzle right now that I saw is, okay, cool. We've got imbalance there. And before this happens, we have equal lows here. We have imbalance here. What could potentially happen? We're dropping. We could skip this imbalance. I mean, skip this low, break past it and come into here. And then we push up. And then we go to fill this. And then we drop again. But that means we have to find something else that's below all of that, which is this low. Okay. But I was like, okay, that could happen. But it won't be as straightforward because CJ doesn't move like that. UCAD doesn't move like that. It doesn't do big moves all in one go. So I'm like, cool, we could potentially break here. And there was really nothing here that I was thinking would connect to this. I mean, there was like, it just broke past these lows. I mean, if I went to a 5-minute time frame or something, I'm like, maybe you could find something there. But I don't really see nothing. So I didn't take too much notice of it. However, I know the principles of institutional trading. I said, if it breaks below here and all of a sudden we get price pushing up, then we know something's going on here, which is why I dropped to the 15-minute. And then I saw that candle, I took my buy. Okay, so now we broke structure here. When we know we're going to come below again within this area. As you can see, the 4-hour was that buy again. But I'm looking for this. I want this. This is the true move I really want. I mean, I bought from here. It's a nice move. It's like 40 pips. But the true move I want is from here to fill that, which is 128 pips. And then from here, 200 pips. And then from there, flip to a 4-hour like UCAD, then we need to fill this and potentially break this. So when this is going down, we know UCAD it's going to be doing what? Going up, right? So UCAD comes into here by the time this is done, and then can we potentially get moves higher? Because all of this is correction. You guys know about market structure, right? It's just legs. If you do measured moves, okay, measured move from there, drag that across here. Okay, we draw this, just where that candle is, and cool. Let's start doing investigation. Thinking if it does go that high, why does it want to go that high? So you can even do this, grab a fib from there. This is in a way, let me get that out of the way. Grab a fib from there to there. Look where 88% lines up with. My favorite levels are 78 and 88, right? What does 88 line up with? This imbalance. Cool. Minus 27 is here, 61 is there. Okay. So let's just say, you know, we'll leave that there. Okay. Actually, let's draw one here as well, minus 27. Okay, cool. Now we'll just do investigation work. What's at these levels? Why would you want to come into here? Let me flip to the daily. Okay, so just above here we had those 2 lines, right? These 2 lines. Let's do some investigation work. Let's see what's here. Why would price want to come into these levels?
There's no candles.
Let's flip to the weekly to speed things up. Okay, so oh, there we go. Let's delete this one. So these are 2 points of interest, right? Why would price want to come into here?
Institutional candle.
Imbalance.
Imbalances.
These equal lows are broken.
Now with that imbalance, you have to actually go down with the time frames to actually get the perfect imbalance of where
Yeah, or you could just draw a big one if you wanted to.
Okay.
Like, and then when price does get into there, where current price action is, then from there you could start investigating and thinking, okay, cool, let's break this down into the smaller time frames. Okay, so you could draw that right across. And then when price eventually does get into there, you can see how, look, the 27 is literally at 50% off it. I mean, trading is magic sometimes, right? Like if I look, if I drew a fib from here to here, look at that. It's ridiculous sometimes. Like it amazes me how everything connects to each other. And like I said, it's just a puzzle. It's just how do you solve the puzzle? Like what's the next steps? Okay, so you can see even on here, what do we have?
Nice.
Like perfect, right? So the money's there. And then now we know we want to break into this area. Okay, so when we do get a move from here, flip up into there. Okay, same as DXY, because you know UCAD is basically DXY. Okay, so you know USD Chef is more DXY, but we know DXY is trying to go higher. Okay, in the long term, so in the short term, sorry, should I say? Okay, so look at the setup. Same thing. I wanted this. I mean, I was ready for this NFP last week. I said, and I could show you the picture of this actually. DSY. Did I save it? I'm sure I did.
So this is how your trading journal is constructed.
Yeah, I'm sure I saved this. Didn't I save it? Or did I just delete it or something? What just happened? Oh man. Could it potentially be this? But why is it so high up there? Why is it not clicking either? Ah, yeah. What? I'm confused why it's so high. Anyway, look. So you saw this picture. I didn't realize I saved so many trades on when I done that. It's like, wow, okay. Anyway, so where was we? So here. So you can see I said this last up candle or this imbalance. This is before NFP last week. And I said it has to come down for one of them and then we'll fill this area here. And then look where price is currently.
It came from the institutional candle.
Yeah.
Or
Remember that yellow? Yeah, remember that candle I was talking about?
Yeah.
It played off that, but at the same time, it created, like you said, the equal high. So we know there's money to be taken there at some point. As you can see, price is just slowly making its way up there. Okay, what did they do again?
Collage.
Just same thing on repeat. It just like same thing on repeat all the time. Then it's created this imbalance into here. So usually when equal highs are like this, like as you remember the Euro GBP was talking about, when equal highs or equal lows are created, this candle is not going to work. Just like your Euro GBP, this is why it didn't work. It's not going to work here because why? It's equal highs. There's imbalance right there to be taken out.
And that candle doesn't represent anything.
Exactly. It's just there because they wanted to move, because this is how they have to move. They have to buy to sell and sell to buy, right? So they have to buy here to move the market down. Okay. And then what they're going to do, they're going to come, their buy is going to be active. So they're going to make some profit here. And then they close it. They close that profit. And then here, you can see this last up candle there as well. They could now take some money out of there also and then just drop the market down again, because the agenda is this, to come into here. You need to take that out. As you can see, in break of structure, it's broken that high. And up. So what do we look for? Fibonacci. 88% lines up with the 50% of that candle. minus 27, minus 61.8. Again, similar to UCAD, if you went onto the weekly, you could see how it drew the equal highs there on a smaller time frame. Okay, so what am I looking for? Okay, this minus 27. Okay, you do your investigation work, like what's at that level.
I like the way you break it down. I do your investigation work.
Okay, so look at this. Equal lows, taken out. Price heads up, comes back down, tries to play this again, but nope. Then you had this up movement to drop all of this down. And this is on a weekly. Okay, so these candles, so if you guys don't know, these candles that take out liquidity and then price goes up, but the price breaks past it, then becomes an area of interest, because this is why support and resistance works. So if you do your homework and you do your back testing, you'll notice that every time support and resistance works, and this is why support and resistance works, is because institutions done their thing. Let's say they sold to buy here, but then they move the price down. Now this area becomes support and resistance for retail traders. It just like it works the opposite of, you know how usually this goes down, it goes up, but we're looking to buy from here. Okay, but if it doesn't play out, then they come back into this candle because they still got money here. They close out and then they move the market down. And this is why support and resistance works. So do your homework on that. The reverse, you just use the reverse of institutional candles, draw lines across it, and you'll see how support and resistance truly works. Okay, so anyway, this is our weekly level for minus 27. We had this volume here, this volume candle that pushed price up and then it dropped. I mean, there's this little tiny one here as well. I mean, it's on a weekly, it's not tiny, but on a weekly it's tiny. But this was where the true volume was that pushed the market up before it dropped. This is where all their buys are. So when I say minus 27 is there and we want to push up, you know, let me be more accurate with that. Let me drop it slightly, because I was thinking that's just past body slightly, but no. It goes right into the bottom of this body, and it could potentially go 50%, but the bottom of the body is what we care about. It goes slightly higher than that. And then
So selling, when selling, you're always looking at the bottom and the 50%, and when buying, you're looking at the top and the 50% of the candle.
yeah. Okay, so we know this is now the play. Okay, so now we just ask ourselves, okay, this is a bigger time frame. It's going to take some time to play out. So in the meantime, how do we play it? What happens next? And yeah, that's what you have to figure out. So we know we want to get down to here. And look, there's still some imbalance in here as well. It's a little gap, which is why I marked it out. You can see that. And this is why I mark up my charts the way I do. You just have to stay ready. And I focus, I don't trade everything. As you guys know, look, my chart is very short, my watch list. And I only watch specific things during the week. Like for this week, as you go, well, you know, I trade gold all the time, but gold has been doing nonsense for a long time. But yeah, I could have caught some trades here, but just the price movement and everything else, I was like, I don't like it. So I'm just going to stay out for now. But gold does want to come back into these. It could come back into this area, that area. It already came to this area, which I missed my sell narrowly here, which is annoying. I missed it by like 5 pips, and then it dropped 500. Yeah, I missed it by 5. It dropped 500, and then yeah, if we keep dropping, at some point, I'm looking at this candle now, this last up candle there, and then yeah, I want it to head into here, and then here, and then potentially here. I'm still going balance, which is 1,000 pips. Okay, on a quarter point chart, this is where I could have got in again. Look at that, perfect 1,700 quarter point, reacts off it. So the next.
Can you please explain quarter point a little bit more in detail for me?
Quarter points are just basically whole levels. Okay, so the best person to watch on this is probably Ivan Cabral, and he'll explain it in very good detail for you. You can watch his session. But basically, they're just whole numbers. So you can see it says 1700 00, 1650 00, 1600 00, 1750. You can see how this price came very close to this. Okay, this reacted perfectly off this. But if you're just looking at these whole numbers, just think about if you worked in a bank and you wanted to sell or buy. Are you going to sell? Are you going to say to your employees, buy to 1681.63, or are you going to say buy to 1700?
Yeah, that's true.
Okay, so these are psychological numbers that if you enter into a computer, or if someone wanted to sell or buy and they say, yeah, I want to sell to 1600, I want to sell to 1500. Like, yeah, would you say to yourself, you know what, I want to sell specifically to 1536.60? Like, are you going to say that to yourself? Like, no, he's like, yeah, I'm looking at 1500 or maybe 1800. And that's why quarter points works. It's a psychological thing and whole numbers.
Do
Okay,
you draw
so
it on every
no, just on
currency pair
golds.
that you're using?
Just on golds. That's I haven't got time. That's if you do this on golds. I mean, in between each of these yellow lines is 500 pips. Or 1,000 pips, sorry. In between the orange ones is
It's
500
500.
pips. So again, remember 50%. If we drew this to there, let me zoom in. Okay, and then we've done this. Let me be more accurate. Okay, so this is how you could do this. So you just already know from 1,000 to 900, in between that, what is it? 950, right?
950, yeah.
Okay, so you could see my Fibonacci's telling me is, well, it's saying 94979, but yeah, it's probably because I didn't draw it accurate enough. But let's draw that there and put 950. Okay, now that's bang on. Now, what's in line with 950? If we're just looking here,
That last down candle.
and then price moves up. So you can see how these prices now get magnetized to these numbers.
So you basically just use the quarter theory to basically just get another confirmation.
Yeah, so even in this one, if I did 1050, what do we have at this level? Perfect touch, create equal lows.
Okay.
This is why I mark up my charts for literally all eventualities. So when price does come to a certain area, I know what's going on before I need to do anything. Okay, so you can see how price broke past this level and respected. Why is that? What level are we at?
1150.
Perfect. Broke past, stayed in there. The body, that's all we care about. We don't care about wicks. We just care about the body. But look how the body's stayed in there. Okay, and then what happens from there? Last down candle, mark it out top of the body, 50%. No drawdown on the monthly.
Yeah, that's beautiful.
And then what happens from there? 6,000 pips happens from there.
Yes.
Okay, but again, this is why you need to start mixing different things in together. So if I now look on this chart, remember that entry we just got, 6,000 pips. If we're doing Wyckoff schematics, 6,000 pips, right? Remember this candle?
Yes.
50%, 6,000 pips. Why did that happen? Schematics. Spring, heads up, break structure, same thing all the time. Creates equal highs, comes down. Test in the spring, this last down candle, big volume, heads up. Test this perfectly. Okay, we head up. So this is the monthly. I could say it's all fractal. So that's 2,000 pips. Creates equal highs, comes back down. What does it come back down to? It just steps. It just happens all the time. It's just like the same thing, rinse and repeat all the time.
The way you have this thing marked up right now with the phase A, B, C, D reminds me of physics, bro.
It's not like, I know it's crazy, right? But literally all the answers are here for you. Have I gone too high? Yeah. Okay, so literally all the answers are here for you. It's like just copy and paste. Got live examples here. Okay, but you just copy and paste it. Okay, so yeah, and just understanding where you are in the market. And then, yeah, we had that sell off from there. Okay. I didn't manage to catch it, but I saw it happening. I couldn't, I mean, I had a sell limit, but it went up 60 pips higher than I wanted to. So I think, was it this one? Wyckoff schematics. Yeah. No, it's not that one. Gold fib. I'm losing. I'm marking it up. Wait, yeah, it's here. Quarter point. Okay, so just before all of this happened, before the drop happened, I wanted this to happen. Okay, so D1 50%, monthly 50%. These two levels marked out, but it went up 60 pips higher, so it took me out than I wanted to. You can see here the daily, it went up 60 pips, way higher than I wanted it to. Then here I could have got in, but the price action was messy. The spread was like 200 or 300. I was like, it's not worth it. And then it just dropped, and here we are. I remember I was showing you this earlier on. So yeah, so there we are. It just, yeah, that's what I say. You just play on time frames. Just play on different time frames, and then from there, you already know what's gonna happen. Okay, so just plan it on a bigger time frame. Like you saw how we broke down UCAD on a bigger time frame, and then now we're just waiting. Or was it DXY? One of them, but they're basically both the same thing. Plan on a bigger time frame, and then you know where you want to head to, and then for the rest of the month, for 2, 3, 4 months, you start trading in that direction for Euro GBP, wherever it was. Euro GBP on a monthly, I know where I want it to head to. It's already done that, so we've been catching sells. Everything I'm looking for is sell, 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 sell until we get to here. Okay, so that's like another 800 pips away. 800. This one, last down candle, but we still got these imbalances here, which is another 1,200. We've still got that imbalance there. 1,400. We've got the last down candle there. 1,500.
So in that sell momentum, you still look for the institutional up candles.
Yeah, I remember what I was saying about the agenda. What was the agenda here? Equal highs created. Agenda, take that out. It's done the work above. Now what's below all of that? Equal lows below. Take that out. Okay, when that takes that out, what's the agenda from there? Okay, cool. We got sell to buy, and we got some imbalance here. So now I just, okay, with market structure, this one should play out more than this one, because if it breaks past here, we're breaking some lows, which means we're now in a downtrend. But yeah, why not? Why wouldn't we be in a downtrend? Why wouldn't we? Because got these lows here. Okay, why wouldn't we? Okay, it's already done this whole distribution schematic for like years, since 2016. Why wouldn't it drop all the way down here? It's taken all this time to do this distribution schematic, just like gold. Gold took, specifically, it took 7 years to accumulate all of this. 7 years. So why would they want to now break below? Okay, so the same thing. So you can see how I got this last down candle marked out, just ready. But we've got equal highs right here. So you can see why. Again, I'll use my fib for this one. From the low to the high. Sorry, this zoom thing is just in the way. Let me move down the way. Okay, so cool. So to the high here, and look where we bounced off from, 71, perfectly. Like, I mean, there was like no drawdown maybe on that. Okay, so 71. And then where's the fibs? Minus 27. You can see why I marked this out. Minus 27, minus 61.8, marked out. You can see, stay ready at all times. And then away we go. Okay, look, accumulation, up. Okay, so now when I marked out this level on the 50%, remember this is the 50% I was talking about, and look how perfectly that played out. It's dropping. So where do I want it to drop to? Okay, let me just remove this fib because there's too many lines on the screen now. Where do I want this to drop to? So you can see how I already marked this out. If I go into the weekly, what do we see on the weekly? The same thing over and over again, literally. You can see that reaction, perfect. This week finished off very bearish, so we know we're heading down. What do we create here? Equal lows. What's below that? Last sell to buy. What's below all of that? All this imbalance on a monthly. Okay, so searching for price here.
What's IPA?
Improper price action.
Oh,
Okay, so on a monthly, improper price action happened here. Imbalance, aka imbalance. So you can see why I wanted price to drop into here. But below that also we have this. But firstly, we just need to get into this area because why? Last down candle, doji, before we headed up. Okay, so I'm wary of this. Okay, this is why I still believe potentially, I won't be surprised if we've already hit 50% of this candle. We've left all these equal highs here. We've left all those equal highs there. So now I want it to drop into here and move into minus 27, but wrong tool. But I won't be surprised if we do respect that 50 cent and what happens.
Get past.
And then finally, what happens? We could now get that move. But with current climate, with what's happening in the world, we know gold is a safe haven. I don't see why this would happen. The only reason I see this would happen is if somehow they say, you know what, gold has no value no more. We don't care about gold. Everything's going to be digital currencies. I don't know. That's the only way I could see this now in this 2020 or 2021 happening. Apart from that, maybe short term, there might be some bad news and saying, oh, you know what, gold, I don't know, man. I possibly don't know what it could be. But market structure, retrace backs into here, heads back up. The reason we had the fall in the first place was because when this crisis was happening, all the rich investors, because they're very smart. They're like, oh, okay, I've got a lot of gold assets. I've got a lot of money in gold. Why don't I sell my gold? I get all that liquid cash. And then people are losing their homes. People are losing jobs. People are like desperate. So now I have liquid cash to buy things for cheap, like houses. Let's say someone's in real like mad trouble. And you know what? Their house is 500K. And now they're looking to sell it for 200K because they're so desperate. Now you have all that liquid cash to buy the house for 200K. You buy the house for 200K, the market recovers. Now that house is worth 800K. You just made a lot of profit, 600K in profit. Okay. And then you buy your gold back and then price heads back up.
Okay.
So now we head back up. When the next market crash happens, people are desperate again. What happens?
They sell.
You sell your gold, you get liquid cash.
you push higher.
So it's just a game. It's just a game that they play.
It's just a game. Because look,
A game of making money.
okay, so this is what happens time and time again. Okay, so that's how the game works. That's how the world works. Okay, so long term, I'll be looking at that. So, like I said, I won't be surprised if we drop. I mean, I would be surprised if we dropped all the way down here. But at the same time, what's really happening in the world right now? Who knows? Okay, like there's conspiracy theories that I look into. I research this stuff, and I believe there's a whole. It's a lot of badness happening out there. I won't share my views, but it's all crazy, and it's all in the name of control. Because if you want, like, when you have so much money, like you control the money. Who cares about money? It's about control, right? You just want to imagine you're playing a video game. You want to have the most control. You want to have the most success, right? And for them, it's just a video game. It's like, how much control can we have? Look, everyone in the world in the house right now, who's controlling
Exactly.
that? Who's controlling that? You have to ask yourself.
And the people are the puppets.
Exactly. So it's just them laughing. They're just laughing. Like, they're just like, man, like we've got everyone on house arrest for no reason. And that's how quickly they can do it. And then they're like, you know what, you got your release date now. Go out and play little puppets. So
exactly.
You have to understand the world agenda and understand what's truly going on in this world. And then from there, I mean, there's not much we could do about it. because we live in society, we live in their agenda. Like if they do something like say, you know what, the only way you can come out of quarantine is if you get this vaccine, and in this vaccine has got this microchip that you have to now use to travel, to pay for whatever you want to pay for, or whatever else. Like, what option do you have? If you don't incorporate them, then you don't live your life. You just get cut from society. So, I mean, you can know about it, but there's not much you could do about it unless somehow you figure out a way to live a life that you don't need none of society's new world's thinking. That's the only way you're going to get out of this. But like they say, the true hustlers will always survive. The adaptable will always live on stronger. Okay, so it's just how you adapt to the changes. And this is why I do my research. I'm like, man, that is scary and it's a bit shit. But what can you do about it? We just have to adapt to it, right? So yeah, that's basically what it is. That's all to do about it.
Exactly. Thank you very much.
Yes, your car. One sec. Yeah. 1 sec. But yeah, that's literally it, man.
That's perfect, man. Thank you very much. We really appreciate it. We couldn't have asked for a better time and for someone better to explain it to us. So we really appreciate it, man.
No problem.
Bro, you should like consider going on Go Live.
It's not that easy, bro.
Is it?
It's not that easy, man.